stock Leggett Platt for entertainment purposes only. Now, I didn't know much about this stock, but it was recommended by one of my subscribers, Daniel, so thank you so much for that. And guys, please recommend any stocks you want me to look into, because this one was a great idea. Now, like I said, I didn't know much about it, so let's go through it really quickly, overview. So there's a residential product segment, and in that is this section, in terms of bedding, so spring mattresses, foam mattresses. Then we have fabric and flooring, so fabric, textiles, flooring products, whatever those things might be. For example, cushions under carpets. Now the geo components, we'll talk about that in a little bit. That's really interesting. In terms of the machinery group, that's pretty much just the machines that help build all of these things. They sell those to other companies as well. Now in terms of the industrial product segment, so we have this wire group, which has to do with drawn wire and steel rods. They're producing these things. Talk about that in a little bit. Very interesting. And now in terms of the furniture segment, so home furniture, work furniture, consumer products, which we'll talk about, is pretty much reclining beds. So you can kind of see how this company is, all these things are pretty much very well connected. So a lot of synergies we're going to talk about. Now in terms of the specialty products segment, so we have automotive products and aerospace and hydraulic cylinders, and we'll talk about that. And we'll go deep into all of these things, but just to get kind of an overview of how all these things are going to really fit together and what doesn't fit together, because I think that's really important. So in terms of the residential product segment, so we see over here that they're talking about the fact that they have efficient manufacturing methods, internal production of key raw materials, purchasing leverage, and large-scale production. Those are the huge advantages. And so when we were talking about those drawn wire, so that's going to help them build the springs for their mattresses. They're getting massive purchases of raw materials because they're using so much within their own company and selling to other companies as well. So a major positive for the residential product segment just from that alone. Now they bought this ECS, which is a foam manufacturer, and it's also a vertically integrated model. So you see that they clearly see this as an extremely important part of their business, the fact that they are controlling everything from the ground up, and they pretty much get the cheapest prices for everything, as much as they can, and so they can be competitive with competitors. Now the mattresses are sold both through traditional and online channels, and that includes mattress components, toppers, pillows, and furniture foams, and so you can obviously see the synergies going on. And ECS, this foam company, has diversified customer mix, so that's going to be a benefit. You can sell them all these other things like the spring mattresses that you already have. And it's also a high growth compressed mattress market segment, and I think that's going to be really important because we're going to talk about, is this company stagnating or are they looking for growth? And from my perspective, it sounds like they kind of feel like they are stagnating and they're looking to somehow grow both their existing businesses and also new businesses. So let's talk about that. And specifically the geo components. So what are these? These are synthetic fabrics and other components for ground stabilization, drainage protection, erosion, and weed control. And it's this really interesting thing that pretty much it's a synthetic fabric. And so for example, I was reading on their website, we'll talk about it in a little bit, but it allows water to go one way and not the other. So for example, I could see how that would help with erosion control. And this is a totally new area, and you can kind of see how this has nothing to do with furniture or beds. And so they're clearly looking for a new area to grow. So that is both a good and bad sign, right? The good sign, obviously, is they're looking for growth. They're not just stagnating. They see this as a problem, and they're trying to tackle it head on. The downside is that this, I don't entirely see how this connects. Yes, it is part of textiles and fabrics, so maybe there is a little overlap there. I get that. Nevertheless, it doesn't, have to do with bedding or furniture. So I don't know if this is a good thing or a bad thing, right? It allows them a much bigger market on one hand. On the other hand, it could confuse the company and it could misalign some interests and where money's going and what should they be focusing on and researching. So a little bit, let's say, risky if not done well. Now, in terms of their customers for their residential section, you can see, bedding brands and mattress retailers. So I don't know if this is true, but pretend if, Sealy or Simmons, they're going to be buying the mattress from Leggett Platt, and they're going to put their own name on it. Why? Well, because they designed the mattress. Yes, Leggett Platt built it, but they were the ones who designed it. They chose all the specifications. And, big box retailers who sell mattresses, flooring retailers and distributors. So, a little bit of a different customer base. And now this new customer base of contractors, landscapers, road construction companies, government agencies using geo components. So totally new customer base. And that might be another reason why they're moving into this segment, is because they can expand their customers. And so if some of their customers kind of go away, they have a whole new section of customers, and maybe they can use customers from this group and mix them with another group, meaning they can use these new contractors and landscapers. Well, maybe they're also going to be able to sell them furniture as well. I don't really see it, but I can kind of see the general idea, I suppose. Now, in terms of their website, this is their website, Haynes Geo Components, if you want to look at more of this geosynthetic stuff. And, I guess this is a picture of how it's being used for growing plants. I don't know, very interesting. But like I said, I don't entirely see how it fits into the synergies that we've been mentioning so far, except for maybe the fact that it's a textile or fabric. But I would be hoping for a little bit more. Now, in terms of industrial product segments, so pretty much they make these low-cost, high-carbon drawn steel wire. And that's really important because the majority of it is used by their own wire mills. Specifically, I found they mentioned somewhere else 70% of their wire output is used for making their own products. So that's amazing. That means that this vertical integration, they're using an enormous amount of it. Not only that, but they're offsetting some of the costs, because an extra 30% now that they're selling for a profit is going to help offset the cost of this manufacturing, which is great. Now, in terms of the furniture product segment, so let's look at this. So we see for home furniture, steel mechanisms and motion hardware, right, for allowing tilting, swiveling, reclining chairs, things like that. Spring and seat suspensions for chairs, sofa, and love seats. So you can obviously see the synergy here of the, mentioning springs and, the cushions, everything. Obviously that connects with bedding, of course. And of course, work furniture, soft seating. Once again, these base columns that allow for tilting and swiveling. So obviously there's some synergy with the home furniture and adjustable beds. And obviously that clearly connects with their bedding segment, right? In terms of both manufacturer, but also, who the customers are going to be. So synergies, I think, play in a major, major role for this company and its success. Now, they mentioned that they're having some problems with the fashion bed home furniture business. It underperformed. Pretty much cost too much to make everything, and it wasn't selling well. And so they decided to exit the business. And because of that, they had $16 million of restructuring costs in 2018. 2019, they had $15 million. But pretty much they hope to be done by end of 2019. No more costs. So that will be good. Fewer expenses, of course, is always good. Now, in terms of the specialized product segment, so you can see in the automotive group, automotive seating. So once again, we're seeing that synergy. Seat suspension systems, obviously great synergy there. Motors, actuators, used in a variety of vehicle power features. So that's pretty interesting. That's going to be a little different, except you can see the synergy at least with the possibly with these beds that recline and are automatically controlled. So you can kind of see some overlap there. Now here's one where I think is also now a new business, and that's for the aerospace products, fluid conveyance systems. I don't know, obviously they're important. I don't know what they would have to do with anything else, except for maybe if some of these things are hydraulically controlled, for example, the seats, but I can't really see how something like the seat moving in terms of the connection with something so sophisticated, fluid conveyance. But obviously the engineered hydraulic cylinders, you can kind of see the vertical integration, at least it appears to me, vertical integration there. In terms of the customers, automobiles, aerospace, right, that makes a lot of sense. Now, sadly, these areas of business are going to be hurting quite a bit right now, and so that's a little bit scary. So for the specialized product segment, keep that in mind. Now, in terms of acquisitions, so in 2019, we mentioned ECS, this foam mattress company that they bought, but they also bought a geo components company for $21 million, so not a lot of money invested in that business. In terms of the precision hydraulic cylinders we just mentioned, that was just purchased in 2018. They also mentioned the fact that it's a new growth platform, right? So once again, it's a separate, they're looking at, it seems like a separate business, a separate kind of direction for the company to possibly go in. They also got another 2 small geo component businesses for $22 million. So very small expenditures here moving into a new business. Then in 2017, they got a geosynthetic business. They also got this bent tube manufacturing business. And then they also got this business for rebond of carpet cushion. And so obviously you see the synergy there. But once again, so in the past 3 years, you're seeing them purchase, yes, companies that have synergy, like the foam company, like the Rebond carpet and the bent tube manufacturing company. So I get that, but you're also seeing this foray into totally new areas like the precision hydraulic cylinders and the geosynthetic textiles. So pretty interesting. Now, in terms of the product line, what's the percentage of sales? So if we look at Bedding Group, obviously the biggest one, and it used to be well balanced with everything else before, but it was stagnating. 2017, 2018, 21% in both. And then in 2019, they bought the foam mattress business, and so obviously that's a huge jump, 32%. But nevertheless, before that, I don't know, it looked like the spring mattress business was somewhat stagnant, which is not great. In terms of automotive and fabric, it was going down year to year. Same thing with home furniture, going down. In terms of 2019, everything's going down, but to me, that's not so indicative, just because everything's going to be a smaller percentage because they bought this new foam mattress company. It's kind of offsetting everything. So I'm not going to pay too much attention about all those things going down, but it does make me nervous that in 2017, 2018, these things were going down. And of course, I guess it continued in 2019, at least somewhat. But we'll have to look at this in more detail. Okay, so now they mention themselves that they make their own raw materials for the products that they make, right? That their steel requirements are through their own rod mill, that their drawing mills supply nearly all of our US requirements for steel wire. So clearly they value the vertical integration. They mention it explicitly, and that's really good for them to keep pounding on that, because I think that's one of their most valuable assets from my perspective. Now, in terms of customer concentration, this to me scares me a little bit. Their largest customer accounted for about 5% of their revenues, and their top 10 customers represented 34% of their revenues. So, you know, if some of these customers are hurt, that could be a major issue for this business, which is a little scary because obviously they're a business that sells to other businesses, and so I guess that's part of the business. Sorry for saying the word business so much in so few sentences. Okay, moving forward, in terms of their patents and trademarks, so I'm not going to worry so much about the trademarks from my perspective, because once again, they're selling to companies, not to people. So to me, the trademark is, I guess, less impressive. But in terms of patents, you can see they have 1,500 patents, which is pretty impressive, but also they have 600 patents in process. Now, I don't know exactly where those are divided, so we'll have to talk about that and get into a little bit more details. But, you know, is that because of the geosynthetic? Is that because of the foam stuff? Well, presumably all of these things are going to come together to give them more patents and more of a moat, which I think is really important for this company, and I guess any company, but it's very valuable. Now, in terms of product development, so I just found this somewhat interesting. They have these things called Comfort Core, which are their fabric-encased inner spring coils. That's 55% of inner spring units in 2019, and this thing called Quantum Edge. So you're seeing these trademark names, once again, meaningless to me, but hopefully meaningful to someone in the business, and you can see that's why I kind of value the trademarks a little bit less maybe than the patents. And nevertheless, these are things that Quantum Edge allows them to replace rigid foam perimeters in a finished mattress. So obviously, they're constantly working on improving, you know, spring mattresses, which I guess is good, both as a consumer of spring mattresses, I suppose, but also in terms of the company. They are not resting on their laurels, which I you know, from my perspective, is a really positive thing. Now, in terms of what, you know, who they are and what they do, so they say that they're the largest US-based manufacturer in terms of revenue of the following. At least they believe this to be true: bedding components, you know, automotive seats, bedding foams, flooring underlayment, adjustable beds, and bedding industry machinery. So that's a pretty impressive, you know, just, first of all, just to be in one of those is impressive, but to be in so many different areas, really impressive. Now, they mention some risks in their 10K, so let's go through them somewhat quickly because they're really important. So they mention the fact that they have a lot of competition from low-cost countries, which I thought was interesting. That is their biggest competition. And the biggest problem are, you know, lower raw material costs, lower labor rates, of course. Now, how do they fight that? Well, they mentioned they have efficient operations, automation, vertical integration, which we've mentioned quite a few times, logistics and distribution efficiencies, large-scale purchasing of raw materials and commodities, which we also mentioned. And so, you know, from my perspective, I think that this is a really impressive positive for the company. I've mentioned it quite a few times. Now, if this list of advantages that they have, you don't see it as a big enough moat or a big enough reason that they'll have an advantage over lower cost, competitors in the world. If you don't see this as enough, well, this is a really big red flag. This is pretty much their big guns. This is what they can do and bring to this whole business. And if you don't see this as enough, this is a big red flag. So I'd almost say like this is enough research for you. Of course, keep watching to the end of the video and subscribe. But nevertheless, so from my perspective, I think that's good. And let's keep going. But it is really important to see how their competitors, as far as they see, are these low-cost people edging into their business. Now, they mention in terms of ECS, this foam company, that they might not realize the anticipated benefits of the transactions. And of course, they might not have revenue synergies. And this revenue synergies is, I thought, a really important point. So they don't just see themselves owning a business that will grow. They see themselves owning a business that they're going to integrate into their existing business. And I think they're going to try and sell spring mattresses to some of the new customers, and they're going to sell foam mattresses to their existing customers. And, and possibly even the foam technology into their other products, like their home furniture and work furniture products. And so that's what I see as another major advantage for this company. Of course, there's a lot of goodwill, which we'll mention, and that will probably, or might be, I don't know, probably, but might be written down just because everything going on. I think it's pretty clear that the foam company is not going to work as well as anticipated, sadly. But, that's happening for all businesses. Now, this I thought was pretty interesting. They mentioned credit agreement. Their credit agreement contains covenants that may limit their operation flexibility. Why do they have this massive credit agreement? Well, presumably to help them buy the foam mattress company for $1.2 billion. And so there's some stipulations for them to get that type of money. So they mentioned that they pretty much have to have a certain debt to earnings ratio, and that is right now, or at the time of the 10K, 4.25 to 1. And pretty much by March 31st, 2020, which we're already past that, but it's supposed to be 3.5 to 1. So, that's going to be a little bit scary, of course, when you're reading this 10K, because obviously their earnings are going to go quite a bit down, even if their debt doesn't go up. But of course, their debt probably will go up, because who knows if they can fund everything that they're doing when people aren't buying more mattresses, and also their earnings are going to go down. Well, that's going to ruin this whole credit agreement. What's going to happen? Well, they mention that the banks have the ability to terminate their commitment to provide additional loans, which, might be devastating for them if they're expecting more money to be able to be accessible to them. But also that pretty much all of the accrued unpaid interest and fees might be immediately due and payable, of course, with the principal. That goes without saying. And so that would be disastrous. Now, I will give you a sneak peek, at least we're not there yet, but in terms of their first quarter results, they mention that the banks have become a little bit more flexible in terms of the debt to earnings ratio. So they're obviously still keeping an eye on it, but they have, I guess, pushed it back to, well, we'll talk about the specifics, but somewhere, once again, to the 4.25 range. So that's a thumbs up, at least for banks, at least for this company, I suppose. Now, in terms of cost of raw materials, this is another risk, right? What happens if raw material cost increases? Well, what they do is they pretty much, everything moves with the market, and so when they have to increase their price to increase to recover the higher costs of these higher raw materials. Of course, they also, when the raw materials go down, pass over those benefits when they sell to their customers. So presumably these massive mattress companies are able to take the high and low prices and they average out for them, presumably. But nevertheless, it's not great when obviously if the cost of raw materials goes up for a long time, then beds go up in price. People maybe are buying fewer beds. Not great. They might turn to those low cost foreign producers, which is going to be a problem for this Leggett & Platt. Also, perhaps they want to, these customers are going to go with replacing higher cost components with lower cost components, right? So that might negatively impact how the business works. So they mention here that in, their line of business, pretty much everyone competes primarily on price. And so, right, they have this problem of pressure from foreign competitors, which we mentioned, due to lower labor rates, lower cost of raw materials. So once again, they're highlighting it in their risks again. So, I just mentioned it again because I think that's obviously going to be their biggest issue in terms of competition, of course. Now, another problem is goodwill and other long-lived assets. So, these things might be reduced. And that's pretty scary because in 2019, because of pretty much their purchase of ECS, the foam company, right, they're having $723 million of, and we'll go through, the goodwill, exactly how it's going to work out. But obviously this company might not do as well considering everything going on and people, not necessarily buying new mattresses. And so what happens to all that goodwill? Will that all be written down, or is that going to just stay and people will look at this as kind of a blip? I don't know exactly, but it's very possible that they lose a lot of assets off of their balance sheet because there's so much built into goodwill, right? You're talking about $2.17 billion in total, which is 45% of their total assets. Now, I'm not saying they'll all just get written off, of course, and it's all just going to go up in smoke, but it's obviously something that could be a little scary to other investors, right, when you're considering that cost, that price of the stock. Now, what's going to happen in terms of bankruptcy and financial difficulties in terms of some of their customers? Yeah, that could really happen, right? If people aren't buying mattresses, so then even if this business, Leggett Platt, is doing well and can recover, well, they need customers to be able to be there to buy their mattresses. So a little bit scary. Now, obviously, there's another problem in terms of tariffs on imports of steel and aluminum products, which have been going on. I don't know if those are going to increase or not, but obviously something to keep in mind that obviously affects, the springs in these spring mattresses. Now, this is a pretty interesting one, a very odd one, but pretty much they are estimating to lose $15 million to lawsuits, and pretty much all these lawsuits have to do with the Brazilian government. A little bit scary. Right, you don't want to be on the bad side of a government, of course, that you're dealing with. So they have Brazilian federal cases, right, that dating from, issues from 2011 and 2012. So going back quite a bit. And it's specifically with the Leggett Platt, the Brazil limited version, I guess, different company, but obviously under the same, a subsidiary, presumably. Nevertheless, it's, presumably 2 million and 0.1 million and 3.5 million respectively, all these different issues about, that Brazil has brought against them. So for example, in 2006 through 2011, the finance ministry is claiming that, that Leggett Platt has used the wrong tariff code. So they're trying to cheat tariffs. And so, Brazil is coming after them for that. And of course, that the ministry also then challenges Leggett Platt Brazil's use of tax credits in year 2005 through 2010. And in 2017, Leggett Platt Brazil received an isolated penalty from the finance ministry in the amount of $0.2 million regarding the use of these credits. And then in 2013, they got hit again by the finance ministry filed for tax collection. Why? Well, once again, because of these tax credits and incorrect VAT rate that was being used. And then 2014, you're kind of seeing these things from the Brazil government. It almost looks like the tariff code and the tax credits, and they keep kind of, I don't know exactly about the tariff code, but the tax credits keep piling up in terms of lots of little different issues, and these are damages to the company. And it's also going to damage their connection with the finance ministry and the Brazilian government, right? You want things to be able to move smoothly if you're going to work in a country. Now, furthermore, in terms of the state of Sao Paulo, I don't know if I'm pronouncing that correctly. Sorry if I just totally butchered that. But in 2012, they also they issued a tax assessment. And then in I'm definitely going to butcher this, state of Minas Gerais, I don't know, sorry. In 2012, they also got another tax assessment and, VAT rate dispute. So you're seeing these things keep adding up, different people coming after them. Luckily, it's only $15 million as of now, and they're clearly trying to deal with a lot of these problems, settling with some of them and, cutting some of the losses and not going to court necessarily. But they're not all settled, and there's obviously some risks there. Luckily, not major risks, but obviously important to mention. Now, what about foreign currency risks? So obviously, because of the exchange rate, that's going to affect their balance sheet, right? 34% of their sales are from international operations. And so let's say they make a certain amount of sales this year. Well, if the US dollar goes up in value the next year, even if they make that same amount of sales, it's going to look like they did a lot less. And we mentioned in one of our videos quite a while ago, watch all my videos to try and find it, I guess. Sorry about this. Maybe it's in Tapestry, I'm not sure, or Coke, I'm not sure which video. But we mentioned that pretty much the US dollar is going to be a safe haven, and that was one of the reports based off of the 2008 financial crisis from one of the Federal Reserve's banks. And so it's highly likely that this is going to happen, that the US dollar will go up in value, and so all this 34% of international sales will look less valuable. Now the other problem, and we'll see that they're actually definitely doing this, they're bringing back money from their foreign businesses, bringing it back to the US, paying off debts, doing these types of things. And so, you know, if the US dollar goes up in value, they will get a lot less money out of these international areas, sadly. So very important. Once again, not a major problem, but it is important in terms of, you know, when people look at sales graphs, well, this will affect things. Now, in terms of Brexit, well, they have all this EU and Brexit and what's going to happen with the relationships between customer and suppliers and tariffs and currencies, right? So once again, another little problem going on here. Now, in terms of manufacturing locations by segment, so I found this pretty interesting. So in terms of company-wide, you know, you have 87 just in the United States, and then the next two, China and Europe, are like together only 31. So not a massive amount internationally in terms of manufacturing, but obviously diversified quite a bit. Now, interestingly enough, it looks like China and Europe, that 16-15, most of it is in specialized products. So these new areas, I guess, that they're moving into, whether it's aerospace or hydraulics or possibly even the automotive stuff. So interesting that those specifically are in different countries. Now, in terms of, you know, other exposure in terms of economic conditions, they mentioned that, you know, their products are heavily influenced by consumer confidence, which is not a great thing considering, you know, what's happening and, you know, people being nervous about their next paycheck. Also, the fact that they're talking about disposable income levels, employment levels, housing turnover, and interest rates. And I think actually this is one that's not really mentioned so much in the 10K or the first quarter, but this is kind of my picture. And, you know, let me know in the comments if you agree, because I thought this was really, really interesting, kind of just mentioned, you know, as an aside point. And this is why it's so important to read every single page of these 10Ks and why it takes me so long to make these videos. But for little tidbits like this, once again, let me know if you agree though. Housing turnover, in my perspective, the way I see it is, when do you buy a mattress? There might be quite a few times, different times, but probably the most likely time is when you move, right? When I moved to a different apartment, I got an extra bedroom, I had to buy another mattress. Actually, more than one mattress. But nevertheless, you know, people have to buy more mattresses when they move, or they get larger houses, or possibly even if they don't move to a larger house, I could imagine that someone's already moving. Maybe they've finally outgrown this mattress in terms of just, you know, it's been this many years on the mattress, they're finally moving. Well, they get a new mattress, they'll get a new bed into the new place, you know. And so my perspective is a lot of people purchase those mattresses when they buy that new house. They get, especially when they get that bigger space, and now they have more rooms, and of course you're going to put some beds in them just because you could have guests or families expanding, whatever it might be. And so I'm kind of wondering, now of course Leggett Platt's not selling to consumers. I mean, as far as I know, they're really selling to these big box mattress stores, but of course those mattress stores sell to consumers, so it's kind of, you know, a chain of events where the mattress stores, obviously, because they sell to all these consumers, now have to buy from Leggett Platt. My point is, in all of this, rambling I suppose, is that right now with everything happening, there's so many fewer people being able to even sell their houses right now. There's, you know, yes, you can list it, yes, you can buy it, but it's so hard to do, so hard to visit people, you know, all the limitations and all the banking regulations and people having jobs and all the uncertainty. And so there's not that much housing being turned over. And so this is really going to adversely affect the Leggett Platt, but there's going to be, I think, a delay in terms of this effect, right? Because that chain of events, like I said, those mattress stores buying more inventory, so there's going to be, like I said, a little bit of a delay. And so my fear is that even when the economy recovers, Leggett & Platt will not necessarily recover so fast. And of course, it's going to depend on two things. One, how much do these big box stores, are they going to build inventory fast, or are they going to be cautious? I think they might be a little bit cautious. But also, what's going to happen to the housing turnover? Are people going to run out and buy houses? I actually think that they might, because there might be a lot of people, especially being stuck inside, they might be looking for bigger spaces. Now, I'm just joking a little bit, but yeah, people are, people who are looking to move are still looking to move, and they're going to be buying houses. I'm not entirely sure. I don't know exactly what's going to happen. Let me know in the comments what you think is going to happen with housing turnover when everything gets, unlocked and people are going back to normal. I'm not so convinced that housing turnover will pick up and demand will pick up to the extent it was. Yes, I do think it will pick up, but maybe not as big of an extent, and so maybe those mattress purchases won't pick up as much. I thought that was pretty interesting. Yeah, please let me know what you think. Also, they mentioned the fact that also a weak global economy, lower consumer confidence level, and depressed housing market. So once again, that housing market, but also weak global economy. So, that's obviously happening now, which is a little bit scary for all businesses and stocks, but obviously worth mentioning here. Now, they mentioned the LIBOR here. I don't know, this is not so important, at least for this stock, but we mentioned in terms of JP Morgan, and I think possibly also Wells Fargo, that this LIBOR, which is, it doesn't really matter, but I just wanted to point it out just because if you were watching those videos, you can see how even, let's say, random company, Leggett & Platt, they use LIBOR, and the fact that LIBOR is being discontinued, right, they're nervous about it too, just like the banks are nervous about what's going to happen. Okay, so I was kind of looking to record quite a bit more of this, but it's already gone past 30 minutes. There's quite a lot going on in this company. Next time we'll talk about how a little bit more just of the technical business part, but then we'll try and get into the financials and really try and dissect what's going on with this company. I think it is pretty opportune, interesting buy. I don't necessarily think yet. Of course, my general perspective on the stock market, kind of expecting it to go down. But we'll talk about kind of what the problems are and in terms of financials. I think this company is really interesting and a really positive option, possibly at the right price. So please click subscribe, hit the like button, leave comments, let me know what you think, and hopefully I can get these videos out quicker. They just take me so long to make, but thanks for watching.